stop them. Don't stop them, ICT. We don't want to see you stop. So here's the Dow. So again, much like I was mentioning earlier, it's a high resistance liquidity run. Yes, it will go to our objectives. Yes, it'll get down there lower. But look at the retracements that come back. When you have a high resistance liquidity run, write this in your notes. High resistance liquidity runs will see and have more likelihood of short-term stops being rated. And that in itself is how you would trade a high resistance liquidity run. What do I mean by that? Above this short-term high, what's above it? Buy stops. It runs it. Then price does what? Reprices lower. Okay? Short-term high here, we move away from it, comes back up into an imbalance, bearish order block, trades, goes lower. This run here, what is it really doing? Not only is it taking into account this imbalance here and repricing and rebooking to offer fair value to the market that wasn't offered efficiently here in this one drop down, it's returning back to this order block. And all this sell side that was not efficiently delivering what buy side, the market's going to do what? Offer it on the upside. At one time, this candle was bold-faced green, bullish, to the point of coming into this area here. But not only was it doing that, it was doing something additionally. Right there. Right above that short-term high. Trailed stop losses on anyone short because they're afraid. They don't know what you were told today. They didn't know about that 40-29-50 level in S&P. They didn't know how to read the other markets and trust that it was going to gravitate towards these sell-side liquidity pools. But they're afraid that they're going to lose. And they jam their stop loss up right behind where the market's trading recently. And you cannot do that. When you see my examples, I'm not doing that. I'm partialing out to teach you how to compensate for the fear of not doing that. You're trying to avoid losing. That's what you're trying to do when you first start trading. But you have to welcome losing before you learn how to trade, because that's where the real learning. You're going to see where you're going to make the mistakes. If you do this the right way, you will see where your problem areas are. You're impatient. You're impulsive. You're a gambler. You chase. You're too slow to act. You're lethargic, in other words. Don't hide from that. This is what you want to learn what your weaknesses are right now while we're doing this, because you'll be able to provide coping mechanisms that will help you gravitate away from doing those things and replace those bad habits with positive ones. But in a high resistance liquidity run signature, you see a lot of this coming back for short-term stops. And then it still keeps going lower. But every time when you're a neophyte and you don't know what you're doing and what to expect in price action, every time it runs above these short-term highs, it's going to feel like what to you? As a student of me? Oh, it's a shift in market structure bullish. No, it ain't. No, it's not. And that's why all these yahoos out there that have been writing books on Amazon with my stuff that don't know how to do it, they're leading people down the primrose lane, and you think that you are seeing something that you aren't. And then you're discovering when you get out there and trying to use that abbreviated 5-minute trainer version of what I'm teaching you, it doesn't work. But funny, when I'm out here, it's working for me. And I'm going to teach you the correct way of doing it. I'm going to teach you by the numbers this year. You will know exactly what you're supposed to be doing.